Good afternoon, everyone. Welcome to another Wednesday webinar. It is Wednesday, September 5th, 12:30 p.m. as usual. And my name is Rob, also known as Stock Darts. Frank had to step away for a bit. He may be able to join us a little bit later, but not sure if he'll make it in time for today's webinar or not. But for those of you that are new, my name is Stock Darts. You can follow me on Twitter at Stock Darts. You can find some content of mine on YouTube, also under the name Stock Darts, and you can find a lot more content for myself on patreon.com/stockdarts. I have a lot of free content along with subscriber content in there. And if you're interested in what you see, if you like what you see in today's webinar, the way I approach stocks, I highly suggest you go and take a look at that site and see if you find more interesting info. We have a lot of good trade ideas. We've had a really good month and a half or so since we launched it, with a lot of great trade ideas and a lot of very successful and rewarding trades. So if you have any interest in that, feel free to pass on by and give it a look and see if you like what's on there. Other than that, let's go ahead and get started. We have interesting week so far in the markets. Obviously, it's a shorter week. We had Labor Day on Monday, and we've only had 2 days of price action so far. But the markets in general have been pulling back for 4 or 5 days now. And hi, Denise, how are you? I'm glad to see you join us. As you can see, we've had 1, 2, 3, 4, 5 days since we sort of topped out at new all-time highs. But so far, the action has been pretty benign. There hasn't been any real big volatility or even volume to indicate that there's a lot of selling pressure going on here for the moment. It just looks like regular run-of-the-mill profit taking, which is what we were expecting when we discussed last week. It's this idea that the most likely scenario right now is that we print a pattern very reminiscent of a bull flag, nice high tight consolidation. That was the most likely scenario, and so far it has played out in that respect. Now, whether that continues is of course yet to be seen, but I suspect that the market should turn around and start climbing higher in the next couple of days. So far, nothing has given me any pause to doubt the strength that we've seen and to really doubt the breakout that occurred. And the breakout that occurred on it already had occurred on the small caps, and it had occurred on the NASDAQ, but last week we had a nice breakout on the S&P 500. And that's what I'm going to point out right now is if you look at the S&P 500 and you look at the range that we had established earlier in the year, we were finally able to break past the highs that we printed very early in 2018 and are now in the process of sort of establishing the price action above that area and coming back and retesting it. And as you can see, at the moment, we haven't even come back down to retest this 286 area. We're still sort of holding up above it. And I still think there's the possibility that we continue to suffer the next couple of days. And even if it accelerates to sort of shake out any of the hands that have yet to really get rid of this, there is still the chance that we come in, fill this gap, which is yet to be filled, and maybe even test 286. But overall, everything here so far is still lending towards the idea that we've established this as a new price range, right? We've pulled back, and yet we're not really threatening to break below that area. 20-period moving average is quickly coming up to meet price. The 50-period moving average is sloping nicely as well, showing that the intermediate and shorter-term sentiment is bullish as well. Obviously, the long-term sentiment has been bullish for a while. And so overall, all signs are pointing towards us continuing to rally. I think if you're worried about this and you're looking at the possibility that we may have more selling, the area you want to focus on is 286 on the S&P 500. If we fall back below that area, then yes, maybe that means we need more time to sort of really sort of assimilate ourselves with this idea that we're ready to push the new highs and push past it, right? So if we fall back below that level, there's a decent chance that we need to backtrack even further to figure out if there's enough buying support, enough confidence in stocks to go higher. Now, and that's I did want to point out one, I don't want to call it a negative, but one maybe reservation you could have about this chart, and that is that we've been in a pretty steady channel ever since we bottomed out in late March, early April, right? We tried to break outside of that channel and failed, and or at the moment are failing and coming right back in. And the only thing you could really say about this that you could be nervous about is the fact that we still have a decent way to go to really test the bottom of that channel, right? But that could occur over the course of the next few weeks to months. So at the moment, I'm not really worried about that. And if anything, that just shows that even if we do get more selling pressure, we're still well within the normal framework of what the sentiment has been ever since we bottomed out in the first quarter of the year. So overall, there's plenty of room to pull back and still be in a technically sound uptrend. And I think that the only issue you can have right now is, while there's still more room to go to test the bottom of that, but I think that we're going to probably try to continue to push upwards before we need to come back and retest the bottom of that channel. So I think for now, we're fine with that. But if you were worried about it, that could be the one thing I could see. And if you're a patient, the sort of patient trader that doesn't like to trade momentum to the upside, doesn't like to buy highs, then you might want to wait. You might want to wait till we start testing those moving averages. You might want to wait till we come back. Now, granted, you might be waiting for a while if you're waiting for the bottom of this channel. But if that's the way you like to trade, then that's the way you like to trade, and I wouldn't necessarily argue with it. But for me, I think that we're still setting up for a move higher, and what I'm waiting for right now is just for a resumption of this uptrend. I think we're printing a nice bull flag. I've pointed out on my Patreon page a couple of charts now, yesterday and today, that I think are mimicking the market and are printing very nice tight bull flags, very similar to what we're seeing in the S&P 500. And what I mean by that, in case you're not sure, is this right here, right? And as soon as we resume the move above that, I think we're in good shape and ready to really break out. So all I'm waiting for is for some buying pressure to come in and try to push us past this. Until we break outside of this flag, I'm not going to go ahead and take trades unless they sort of do this ahead of the S&P 500. But if you're looking at SPY, looking at Trade SPY, I wouldn't just buy in anticipation of break of that flag. I'd wait until we actually prove that we're ready to move forward, and then you can go ahead and react to that and go ahead and trade. After all, we still haven't filled the gap, and as I said before, we haven't actually tested this 286 area. So there's still potential for a move down and to come down and retest some of these lower areas. But for the most part, it looks like we're in good shape, and all we're waiting for is for the buyers to really step in and start pushing the price action higher. Now, one thing I do want to point out, we discussed this a bit last week, but I want to point out again, is the S&P 500 was trying to sort of reestablish this uptrend, right? And as you can see, this uptrend that began in the middle of 2016, as we broke out of our range, came back, retested this 213, and then started a really nice rally. It lasted pretty much all of last year, right? Most of this year has been spent in the bottom half of that trend line, right, or underneath that trend line. And we've done a good job of maintaining that trajectory, just at a slightly slower pace, right? Because we're below the trend line instead of above it. Last week, we tried to get back above it. I thought that was unsustainable. I don't think in the long run we can really maintain this trajectory too much longer. But for now, it looks like we're still trying to climb and trying to maintain this. And as long as we stay below it and we maintain this channel, well, we've just downshifted, right? We just shifted to a lower gear, but we're still sort of moving on and kind of continuing our rally. So overall, long term, the market is still in very good shape. And it's just a question of the short term, what we have to do and how we have to navigate these little pressures, these little selling pressure areas and pockets of pressure that we get. And as I said before, I think right now, the way we're lining up, it looks like we're going ahead to try to push and really push the boundaries of this trend line a little bit longer. And so if you're concerned with the market right now, you want to look at where you want to sort of gauge the strength and the health of the market. Well, keep an eye on this horizontal trend line. If we fall below it, then that means we probably need more time to sort of consolidate. We probably head down and test the bottom of the channel. As long as we stay above it, keep an eye on this green trend line. And if we can continue to sort of ride the bottom of that trend line and continue trying to climb higher and explore new highs. Again, I think that we are overall in a nice, healthy state. And as long as we stay up here, well, we're just sort of establishing a new price range. And if that's the case, then there's a pretty decent chance that we will continue to rally into the next couple of months, which is actually kind of exciting, right? Because typically the market rallies around the holidays, right? with some selling pressure coming in September and October. And so far, that is not the case. And it'll be interesting to see if we can sort of rally into the holidays and see how we close out the year. But for now, this is looking like we might have a nice, strong close to the year again. And it'll depend on how we react in the next couple of weeks or next couple of months as we approach October. But things are looking pretty positive. Now, if we look at the NASDAQ actually is doing pretty well also, right? Now, you'll notice that the flag is not quite as tight and as orderly as what we're seeing on the S&P 500, right? You can see today's action a little bit more volatile. You can still sort of draw something like this, and it sort of matches up. But if you look at today's candle, you can see we have a lot more volatility coming in. And a lot of that is due to the fact that a couple of the big tech names are having some trouble. We look at Facebook, and Facebook actually had a breakdown below a key level, right? And so it's having a little bit of trouble here as it starts to falter. If you take a look at Google also lost a pretty key level, right? We actually broke down below a nice intermediate term trend line that was holding steady. And again, showing that there's a lot of selling pressure coming into some of these tech names, particularly Facebook and Google, which are pretty related as far as collecting data, internet advertising, and stuff like that, right? It's not across the board. As you can see, Apple, extremely strong, right? Just continuing to really rally, rip into new highs. Amazon, which joined Apple as in the trillion dollar club, also doing extremely well. And so it's not across the board, but we are seeing some weakness in some tech names, right? And for that reason, we're starting to see a little bit more volatility coming into it today, as opposed to what maybe we're going to see on the S&P 500 or the Dow Jones. However, despite that weakness in a couple of the big names, the overall picture I have of the tech sector and the NASDAQ and the Qs in general is still pretty healthy, right? You can see intermediate term trend line is still very strong, holding. We're still firmly established in a new price range, right? And this is what I was alluding to earlier when we were discussing the S&P 500. The S&P 500 recently broke out of the range it established early in the year, but the NASDAQ actually did so a couple of months ago. It started to really break out, and whether you want to look at it and say, well, the yearly highs were there, right? So you could still say, within that respect, we still have pretty much established a new trend, or a new price area and a new sort of base over the last couple of months, and pretty much as kind of decidedly established that, right? We came down and retested, faltered a bit, came up and retested again, and then have continued to climb higher and are in the process of exploring new highs, right? So overall, the NASDAQ is doing a good job of continuing its rally. And as I mentioned before with the S&P 500, there's nothing here to be nervous about, nothing to worry about the market's strength or worrying about topping out. Things are great. And until this changes, we need to continue to look at this market with the bias of buying, right? You shouldn't be thinking about shorting this market, about selling, about trying to abandon a bunch of names and reeling in your risk. At this time, you should be concerned with taking advantage of the momentum and trying to extract as much profit as possible. Now, that being said, I don't think the risk reward is fantastic in the broader sense for you to go ahead and start adding just a bunch of names to your portfolios. Typically, you want to do that when we have strong moves down to support levels. But this is a point where you do want to be focused on extracting profit, trailing stops, trading names that are strong, trading names that are breaking out, and sort of rotating your positions back and forth into whatever names are picking up strength from week to week. This is a good time to swing trade. This is a good time to be a stock picker. And it's a good time, honestly, to be an active trader because the market is rallying. It's pushing to new highs, and you want to be able to take advantage of that. You don't want to be sitting on your hands right now. You want to make sure that you are finding the names that are mimicking what the market is doing and are continuing to push higher. So with the NASDAQ, again, if we want to go back to the Qs here, I still think there's a lot of nice pockets of strength in the tech sector. Despite what we've seen out of Facebook and what we're seeing out of Google, there's a lot of other areas of tech that is doing well. So what we want to do is, again, wait for the pullback to conclude. Similar to the S&P 500, we want to see this pullback. And you can see, again, very similar to the S&P 500 as well, there's a tiny gap here that has yet to be filled. There's a trend line that needs to be tested. There's some moving averages that need to be tested. But even if we pull back for another 2 or 3 days, we're just setting up nicely into some support areas and then looking for a breakout. However, if we get a strong close today, if we open up strong tomorrow, then we'll find ourselves outside of this channel and likely setting up for a push higher, right? So this is the point where we want to be. We want to keep a close eye on the price action and be ready to start looking for names and trading names as they start to resume their climb higher. We've spent the last 3, 4, 5 days, depending on what chart or what index you're looking at, pulling back from highs. And as I mentioned, we're doing it with a relatively steady volume. Volatility, for the most part, is low without discounting this one particular candle in the Qs, but in the markets in general, volatility has been kind of low. Again, showing that it's just profit taking. And if that's the case, we want to be ready for when the market is ready to resume its uptrend. And as you can see on the Qs, yes, maybe we pull back a couple of days, but once we break outside of this little pennant or channel that I just drew, we should be ready to push back towards previous highs and likely towards new highs. Again, you can see it's not quite a channel, but there's pretty much a nice little channel forming here, and there's the potential for another further move to the upside once we get ready to resume climbing, right? So overall, things are nice and strong with the NASDAQ as well. Now, we take a look at the Dow Jones, and you can see, again, a lot less volatility. We're actually already starting to resume a little bit of a move up compared to yesterday's hammer candle, right? So to a certain extent, the Dow Jones is sort of broadcasting that we are ready to move higher, right? Nice, tiny little candle, but starting to make its way and wants to maybe come up and test the top of the channel that it has formed since March and April. And as we pointed out last week, as we point out pretty much every week, the Dow Jones actually still has its long-term trend fully intact. It never really decidedly fell below this green trend line. Yes, we did sort of falter a couple of weeks and even peaked below it a couple other weeks, but for the most part, the price action has maintained itself in a strong uptrend for the Dow Jones, even when we spent a good maybe half of a year consolidated in a broad sideways range. And of course, the reason for that was because the Dow Jones was so incredibly strong at the end of last year that it had a lot of room to correct and still actually maintain its uptrend, right? And that's what ended up happening. Was it became relatively weak, but because it was so strong prior to this, it spent most of this consolidation within the realm or the boundaries of its long-term uptrend. And once we finally established that the markets were ready to move higher, the Dow Jones has been able to sort of climb and continue to sort of make its way up towards its previous highs. Now, it hasn't reached its previous highs, and again, part of that is due to relative weakness recently, but part of that is also due to how strong it was last year. It had a little bit more room to climb than what some of the other indices did, and so for that reason, it quite hasn't made its way to new all-time highs, but at the moment, it's done enough that we don't need to worry about it being relatively weak, right? We don't need to worry that it hasn't printed new highs because it has firmly established that it's in a bull trend and it's climbing steadily. And overall, and it appears to be leading the market higher as of today compared to what we're seeing in the S&P 500 and the NASDAQ for now. Now, if we did pull back, again, I think there's a pretty established and a really strong trend line that would act as very strong support, right? So even if we do falter here, I think that overall the health of the market is technically intact, and it would take a lot of selling pressure before I'd really be worried about my long positions or worried about starting to change my stance on the market. So I think at the moment we're still in a perfectly strong market, and as I mentioned already quite a few times, we should be looking at buying. We don't need to be looking at selling. We don't need to be looking at closing out trades. Now, granted, you should close out a trade if the name acts weakly and if the thesis is no longer correct. But we shouldn't be looking at sort of trying to reduce our risk in our overall portfolios, particularly with respect to core positions or longer-term trades. Yes, you should still stop out or close a trade if it's acting poorly, but you shouldn't preemptively close out strong trades just because the market's at highs and you think it's ready to go down. Until the market goes down, you should continue to treat it like it's going to continue to go up. Okay. Really, that's not much else to say about the Dow Jones. It's acting very strongly, and like I said, might be hinting that we're ready to move forward, which is what it looks like in the other indices. Maybe we're going to try to move forward tomorrow, but the Dow Jones looks like it's already starting to climb today. And finally, we have IWM. And IWM, again, a little bit different candle, and a little bit more volatile than what we saw in the S&P 500 and the Dow Jones. Printing a hammer candle today. Hammers at the top of the range is usually not what you want to see, because even if it shows a strong close, it shows that there is selling pressure starting to come in. So this is maybe the one chart that you could worry a little bit about, but overall, I think it's still selling pressure within the context of a pretty orderly pullback, right? And so, with that respect, I don't think it's some sort of sign of a lot of supply coming in or a lot of distribution. We are really just in the process of establishing another stair step, right? And that's something that IWM has done steadily all year, right? So if you look at it like this, really, the fact that we're selling is not a big deal. It's just a retest of the previous ceiling. And if that confirms the support, then we likely push forward, push to new highs, and continue to explore higher prices, right? So I think if you look at all four indices as an aggregate, the market is doing the same thing. It pushed to new highs last week. It's encountered a little bit of profit taking this week, but not in a manner that is alarming or worrisome. We're still doing a good job of showing that the bulls are in control, and as you can see, even here, when we do encounter selling, it's immediately bought up, right? And once we're ready to sort of leave this short-term consolidation range, we should push back and start testing new highs, right? Now, if we do falter, if we do fall back, all four of the indices had very clear levels of support, and if we fell to those levels of support, I would still be a buyer. Even if we failed at this level and came back into the previous range, I think I'd still be a buyer for now. I don't think there's enough warning signals for me to think that would be indicative of a market top. I think it would just mean that we need a little bit more time to start pushing our way back higher. So for me, I'm still looking at it from the lens of buying. I'm looking more likely than not to buy names that are breaking out from their recent pullbacks. I think that's the best chart you want to find right now is a name that broke out, established price action above it, and is coming back to retest it, mimicking the markets exactly. And if you find charts like that, they will very likely break out to new highs when the market does, or if the market does. All right, so that covers the four market indices. We're kind of humming along today. It seems like there wasn't really a lot. I didn't need to point out two pictures this week. I think for the most part, the picture looks bullish, with I think a small chance that we pull back further. But even if we did, I think it goes to the support. I'm going to go ahead and look at the U.S. dollar now. We're going to look at oil, silver, and gold. And once we're done with that, we'll move on to chart requests. We have a decent turnout today. If you guys have a chart that you're looking at or a chart you have questions about, feel free to put them into the chat now. We should have a decent amount of time to go over charts. So let's start with the UUP index. All right, now the U.S. dollar is kind of an interesting spot right now, right? As you can see, we did have a nice little bounce over the last few days, as expected. to sort of maintain this upward trajectory. However, you can see that it's encountering a lot of pressure, and it's starting to really slow down in general. After that big sort of move up to 25.60, it pulled back, but it did find some relief, and at the moment looks like it's probably in a position to consolidate. However, if we look at individual currency crosses, the US dollar is doing pretty different things across different currencies. If we look at it versus the euro actually is picking up a lot of strength versus the US dollar. So the US dollar is actually weakening quite a bit here, right? You see we had the mirror image of UUP here where we dropped down, then kind of came back up, and then sort of it established that 115 could be a floor, right? And that's what it's looking right now. We've got very nice tweezers, two nice big hammer candles, and the euro looks like it wants to come up and retest 117 again, right? So this looks bullish for the euro, bearish for the US dollar. However, as we get to the Canadian cross, you can see this is very, very bullish for the US dollar. All right, so the Canadian acting pretty weakly versus obviously euro and the US dollar. And this is actually a very, very nice breakout and likely going to flag here and then resume trying to climb higher. So overall, I'd say this is pretty bullish for the US dollar. And then we have the yen, which is more neutral, but the US dollar looks like it's trying to build up momentum to break out. Now, we did have this sort of bearish turn of events, right? We were climbing our way, then we broke down, we came up. The one thing to note is when we came up and retested this resistance level, we didn't turn around and head back lower. We immediately found buyers and came up and started testing that level again. So this could be a situation very similar to what we've seen in the S&P 500 this year, where we sort of just downshift and then try to maintain that trajectory just at a slower pace and start climbing our way back up, using the previous level sort of as a ceiling, but still grinding against it, right? So I would say this is neutral, but with it looks like it's trying to bounce its way back up, right? So overall, a pretty mixed picture with a bearish, a bullish, and a neutral picture of the US dollar against the three main currency crosses that I like to look at. And so overall, what does that mean? That means that we're probably not going to get a significant sort of resistance or a significant sort of relaxation of the pressure it gives to other commodities, right? That being said, gold and silver continue to flounder at lows and continue to act poorly, right? You take a look at GLD. GLD had a nice bounce recently, but it sort of pulled back and is still below very key levels of support and still struggling. And overall, still not in a spot that I'm interested in buying or really buying or selling. I think if you're a short, you could continue to short pops as long as it stays below 116. If you're a buyer, long-term or short-term, you're still waiting. SLV looks even worse. Gap to new lows yesterday, still struggling today, and is just really lost this level. This is the perfect example of why you want to stay away from charts that break below key levels, right? Sometimes they look like they're ready to bounce, and you want to catch the knife because you think you can get a nice bounce. But more often than not, what ends up happening is they continue to disappoint and they continue to gap and punish traders that tried to take advantage of what they thought was a good value, right? Because they're like, well, this thing's traded at 14 to 15 for so long, it's due to bounce. And yes, it could bounce, but more often than not, what happens is those bounces are very short-lived, and you continue to get punished for trying to jump into one of these things early. So for now, again, I'm not interested in this long-term or short-term. I think that this lost an incredibly important level, and it's going to take a long time to sort of get its act back together. And then finally, we have oil. And oil very different from gold and silver. It actually has found demand and has pushed up. And actually yesterday tried to really sort of push its limits a little bit and start to make its way back up towards the mid-70s or the 70s. And it failed, but it's still doing a decent job of printing a bull flag, sort of like the markets. And probably needs to consolidate a little bit and then try to push up again. As you can see, it's done a pretty good job of establishing the 65 to 67 area as a floor, right? And establishing a new price range between, say, 65 and 75. And if that's the case, that we might spend some time in that area. And if that is the case, then it probably wants to continue pushing and test 75 again, rather than coming down and testing the lower 60s again. And that bodes well for energy names as well. So if you're looking at stocks and you find energy names that are correlated with oil, they're probably setting up for nice moves as well. Okay. All right, so that is oil, gold, and silver. Again, we didn't spend a lot of time on that. I don't think there's a lot to add that we haven't covered over the last few weeks, and most of you guys are regulars, so I don't want to continue to rehash all the arguments and all the cases I make for these things every week. So we can go ahead and move to the chart request. We have about a half hour, right? Denise, so far you're the only one you've asked for AMGN and Costco. Anyone else? Feel free to add one in here because we'll have some time. All right, Denise, here's AMGN. And let me know if you're already involved in this or you're looking to get involved in this. Here's a longer-term look at AMGN. And as you can see, this 170 level, I've already marked it before as a pretty key level. And it's had a nice shift in character here. And it did it in a pretty slow manner. But for the most part, I mean, I guess I could say this. For the most part, AMGN has done a pretty good job of flipping from being a say 135 to 165, 170 stock to being a 170 to about $200 stock, right? So it's done a good job of doing what we like to look at here is this base on top of a base sort of expansion, right? And it's done that in the past. You can see even if we go further back, it had a nice rally, but even then it had some bases that continues to stepping higher. And so overall, it's in a very good place. Now, it is at pretty stiff resistance, but with the strength that we're seeing in the markets, there's a decent chance that this tries to break out to new highs. This is a long-term hold for you. Okay, so as a long-term hold, it's not really much you could do with this other than maybe sell covered calls. And if you were selling covered calls, this is probably about where you'd want to. That being said, this thing is starting to push up and looks like it wants to try to probe new highs, right? Now, I will say this. It doesn't have quite the same orderly sort of breakout and pullback that we've seen in the overall markets. You have some calls against it, okay? So you're doing everything exactly as you should be doing. You'll notice that it doesn't have quite the same orderly price action as the market. There's a lot more chopping back and forth. Yesterday's candle was pretty volatile, showing that there are still a lot of sellers that are worried that it's not really worth more than 200 right now. Until it breaks this sort of triangle, I think that it will try to break 200. But if I was a long-term holder of this, I think 200 to 205 is a good spot to sell calls. And take advantage of this until it can break out. But there's clearly nothing to worry about with this. As a long-term hold, this is acting perfectly well. And as you can see, there's a long way to go before it really had to really threaten anything major, right? And so I'm not sure what your risk appetite is and how far you're willing to hold on a drop. But the overall health of this is very strongly intact. And even if we had a substantial market correction, I would say this thing is still in a healthy place, right? So now, ideally, this would break out and start establishing a new range above 200. That'd be even better. But until it does so, you can treat 200 as a pretty stiff resistance level. And actually, I'll leave that trend line. And a good spot to go ahead and take advantage and sell some covered calls. You have a very small cost. Yeah, I would imagine if you've held this thing has been a really good, again, if we look at it in the monthly term, long term, this thing has been very, very, very healthy and very productive for anyone that's had it, right? It's very, very rewarding. And yeah, I mean, there's really nothing you could say bad about this. And I think we're in a market where there's a lot of charts like this. And I think that you've done a good job and it rewards traders like you that have held it and continue to let it kind of grow. And like I said, I think, as you can see, if we look at it on a monthly chart, right, there's a decent chance that this thing still needs to sort of base out for a longer amount of time. But with the strength that I'm seeing in the markets, I think that we can see a push upwards, right? So I'm kind of on the, I would say if you're selling calls, don't cover your entire position. Cover maybe half of your position, just in case that the markets do continue to rally and this thing breaks out to new highs. Okay. All right. Let's look at Costco. Wow, that's pretty impressive also. I would imagine you're obviously not looking to buy this. You're trying to figure out what to do with this. If you have no position. Oh, okay. I mean, this is really strong. Let's look at the weekly and see. All right, are you looking at this as a swing trade or to add as a long-term holding? So you sold cash and you with puts. Okay, you sold cash secured puts. No position right now. If you're looking to establish, I'm assuming you're looking for a pullback. I'm assuming you're looking at this as a long-term holding also, right? Not as a swing trade? Okay. All right, so I think if you're looking at this as a long-term holding, you will have to be patient because looking at it as, if we look at it on the long term, right, you can see that there's potential for a pretty strong correction that would still be nothing more than a retest of this breakout, right? This did a really nice job. It channeled and continued climbing for a while. It found some selling pressure, which obviously was the perfect buying opportunity. And then it came up and then it formed a very nice base and broke out. And it's in a very tight channel. These channels, these very narrow channels, they're not sustainable for a long period of time. Now, they can continue longer than you would expect, which is really advice for people shorting it to get out because you never know how long this can go. But for people that are buying it, you don't want to buy this sort of an upward trajectory, right? Because the risk reward is poor. Even on a strong correction, it still is technically healthy and still in an uptrend. So what you want to do in this scenario is you want to wait for strong selling pressure to come in. And then when that happens, you can look at selling some puts. I hesitate to say that 200 is the level because I think a name this strong in a market this strong, it's not going to get to 200 anytime soon. Ideally, that would be a beautiful level to get involved. But I don't think that's going to happen anytime soon. I think more likely than not what's going to end up happening is you're going to need to sort of nibble at this and slowly build a position. And if I had to say in the short term, it would probably be something like this, right? Where we need to fall out of that channel, come down and retest something in this area. You can see for the most part, right, something like this, right, where it formed a nice base and then broke out. That would probably be where it would need to come back and retest, is somewhere in this area, 225 to maybe 220. And so if we faltered and fell below that, you could start to nibble at it here, with the understanding that longer term, you probably want something closer to 200 as a substantial area to really add to this, right? So you might want to start with maybe a 10 to 20% position in this area by selling puts, hopefully on a day with strong selling pressure. And then that way you know that you can add as it starts to approach 200 if for whatever reason the market were to add some selling pressure to it. Now again, that's all theoretical. At the moment, this thing is very strong and likely to try to maintain this channel at least once or twice more as it bounces. But as a long-term trader, you can't add here because you're putting yourself in a place where later on it's going to be difficult to re-add because your cost base is going to be very high. Okay. All right, Ron, you're looking at LCI. How long might it take to start filling the gap? You're in it. You're up 6% now. All right, so let's take a look at LCI. Oof, that's a nice gap. This is going to take a while to fill that gap. All right, let's look at the weekly first and get an idea of what we're working. Ooh, it's just as ugly. All right, so this is what we were talking about on the gold and silver charts, right? Where when a chart loses a key level, there's a lot more potential for nasty surprises than there are good surprises, right? And it caught a lot of traders. There were traders that bought this down here and thought, oh, look at this. It's looking like it's going to find some support. It came up, tried to break out, and then came back down. And even there, gave them a little bit of hope, and then bam. I guess there was a class action lawsuit against them. And they've really fallen. Now, you, of course, have played this near the bottom, which is fine. And you're up. So you're up right now 6%. I would not be targeting that gap fill at all. Now, granted, I think it can definitely climb into this gap, but in order for it to fill this gap, you have to think about it from this respect. I don't know who these guys are. I don't know what they are, but clearly there's a big legal issue here, right? This gap probably doesn't get filled until there is a sort of a resolution on this class action lawsuit. It doesn't mean that the lawsuit is dropped, but it can mean that they go forward with the lawsuit, but it doesn't harm the company in the long term. And then that's really that's when you can expect something like this to get filled. For now, you have to assume that this is a stock that has a completely different sort of established value based off of that, right? So the gap fill, I think, is out of the picture. What you're looking at, however, there is upside, right? And what you probably want to, obviously the first target is the wick from the first day that it gapped down, right? Because the first day it reacted, it went all the way up to 7 and then was shot down. So there's potential for a move up to 7, which is nice. That's still that's a point and and almost a point and a half, which is a pretty substantial amount on a 560 stock, right? So you could look at it as something like that. Now, that being said, I would be careful with what your overall risk on this is. It's one thing to say, well, I'm going to put a stop on this, right? And so I'm stopped out. If it breaks down here, I'll stop out and I'm fine. But a name like this still entails a pretty decent amount of overnight risk, right? Where it could gap down below your stock. So I'm not saying close out your trade, because you're up a decent amount, and I do think that there's a chance that this thing tries to make its way to the 20-pair moving average. And that would probably be my ultimate goal on this trade if I were you, would be something like the 20-pair moving average, and then you could reduce your risk quite a bit. And if you are looking for a gap fill, you'd have to wait a while, right? Because again, you'd probably have to wait for whatever resolution would come on this news that forced the gap down. But you could do so with reduced risk if you're able to cash out at a 10, 15, 20% gain on this. So I could see that. But keep in mind that if you, for instance, because it's a $5 stock, you might have put in you might have bought a lot of shares to make sure that it's worth your while. Understand that there is always the chance of an overnight gap, and that you lose even more if this thing gaps. For instance, there's more news that comes out and it gaps even lower, right? So make sure that you understand what your risk is. Your risk is not always where your stop is. That being said, like as I said before, I think $7 is a decent target. It is at resistance now. Let's go to an hourly chart. And you can see, and what we'll do is we're going to say, well, no, it's pretty much there. It's at resistance right now, right? So this would be a possible short-term target, but I think this is a target. And then, as I said, on the daily chart, the 20-pair moving average is a target, and it could be that the 20 moving average meets up with price around this area, right? So that's what, 650, not 7. Is that where the wick is? It looks like it. And I would probably keep this trend line. It's a good tell as to whether this thing is going to head back and start testing lower prices prices again. So that's what I'd be watching if I were in this name. Probably 580 is a good spot to take a little bit off. Granted, that would only be probably about 6-7%, which is not that great. I'm sure you want it more like 10 or 15%. But I think you should lower your expectations a little bit. I don't think that this thing is going to fill that gap anytime soon. All right, Scott, you want to look at Alibaba? All right, Alibaba, acting pretty weakly, actually. All right, so you're looking for an Alibaba entry. You might need to wait on the tariff news, and I think that's definitely a likely scenario as to what's going on here. I will point this out. Until I think it's starting to break support here on the weekly chart, right? But until this is conclusively broken, this is actually a potential support area. That being said, I wouldn't buy it today at all, right? It's starting to push to new lows and starting to push below that area. However, if we get a bullish engulfing candle tomorrow, if we get a hammer tomorrow, followed by a candle maybe on Friday, pushing back past this, then I think it's worth a shot at playing the support level. Because a lot of times these support levels, they get pushed and they get bent, but they don't always break, right? And so there's still a chance that we do find some support here and we move higher. However, if we continue to head lower, then you want to get off of this, right? You don't want to touch it. And very similar to what we pointed out with gold, silver, even what we just pointed out with LCI, once you establish the price action below these key and these critical support zones, there's potential for ugly surprises, right? And for the stock to really react poorly. And right now it's technically slightly below that, right? But you can see it pushed below it maybe once, twice, 3 times, and eventually found some support and bounced a good 20, 30, 40 points, right? So if we can get price to establish itself back above this zone, then I think it's worth an entry. And you have a very easy and clear stop, right? Anything below the lows of today or yesterday. Today's price if it was tomorrow. And it would be, a trade that's not that difficult from a emotional perspective, right? Because you know exactly where you're wrong, and if you're right, you know where you want to go. That being said, now it's not there yet, and it would need to be pretty productive before an entry would come in. But I think that this level is not something I'd give up on just yet, despite the way it looks today. It does not look good today. And I would, as long as it stayed below this area, 166, 165, I would not touch it. But like I said, if it can print a nice pattern here, saying there are still some buyers left, it might be worth a shot, right? Again, we had huge volume come in, based probably off of news, a lot of volume coming in, and the second retest of this zone is on lighter volume, which a lot of times shows that there may have been capitulation. So there are some signs here saying that it might be worth a bounce. Now, if it did bounce, it's got a lot of work to do before it really can make its way back to the top of the range. So if I took this trade, I would have a pretty quick trigger on at least partial profits. And a good area here would maybe be the 180 area. It might not even get to there if it starts to really bang its head against this trend line. But you've got potential profit-taking zones at this descending trend line at 180, and then a pretty clear one around 185 to 186, which would be the 200-pair moving average. Then, I mean, ultimately 200 to 210 or 20, but that would be trailing a very small portion of a trade if it were able to cross all these other barriers. And that would be, I think that would be the key. Would be you want to find a reversal here, and then if you want to you're going to have to take profits in this noise here. Now, if you're a very conservative trader, for some of you, Scott's looking at this now, but for someone else that's maybe a lot more conservative and doesn't like to trade stuff when it's still within consolidation ranges, then what you'd want to do is you'd want to just wait for it to establish price action on this side of the trend line. And then in that case, you have a little bit of a smoother trade back up with a lot less sort of potential scale outs where you have to just continually manage the trade to make sure that you don't get caught on a reversal back to the bottom, right? So that would be the scenario that you'd be looking at if you're, a slower trader that doesn't like to trade this noise, likes to have longer trades that work longer, and you can hold them for months at a time or even weeks at a time. And you're looking at 210 to 212 as your overall target, then you probably want to wait to be on this side of that trend line. And then in that case, you'll have a little bit of a smoother ride. Because again, even if we get a strong bounce here, there's always the chance that it hits this trend line and it comes right back down and retests 166 again, right? So if you do trade that bottom, let's say we get a bullish engulfing candle tomorrow, you probably still need to trade this actively because there's always the chance that it continues to respect this trend line, the moving averages that are swooping down pretty quickly, and it may even come back and retest 166. So you have to be pretty proactive with how you take your profits and how you manage a trade if you do try to take this bounce play. All right. I hope that helps, Scott. Ron, looking at more weed stocks. Which one do I think are the strongest? So let's take a look at Cronos. We've looked at CGC quite a bit recently, right? So what we're going to do here is we're going to look at them, and we're going to look at them from a weekly perspective. I'm going to go ahead and say the likely scenario is that when you have sort of a burgeoning industry like this, right, that's starting to come out, and this is sort of the same theory I have with a lot of cryptocurrencies, and that is you want to figure out which ones are strong. Like you're asking a very good question, which ones are the strongest, but a lot of times there's not a clear answer, and so to a certain extent you want to diversify and make sure that you have a piece of a few of them, because you don't know which one's going to in the end be the strongest or be the one that really breaks out, especially someone like me that's not going to do a lot of fundamental research and is looking at it from just a technical perspective. The idea here is you want a piece of a few of them, and the ones that are acting well. And clearly, Cronos is acting just as well as Canopy is, right? Look at the massive volume on this breakout. Was doing sort of the same thing, right? We've got, depending on how you want to look at it right now, I think that's a pretty accurate view, but there also is a nice horizontal level, right? And it had a nice base. I like this chart quite a bit. Maybe, well, I don't want to say more than CGC, but I thought it printed a very easy, well, they both did. They both printed pretty obvious patterns. Massive volume on the breakout. I don't know that I'd pick I don't know that I mean, I guess you could say CGC is still stronger, right? Because it's printing new highs even today. Well, Cronos did too. I don't know that I'd pick one. I don't know that I'd say one is stronger than the other. What have we had here? Basically 6 to 12. So this thing is doubled. So it doubled from the bottom, and these guys doubled from the bottom. It's almost identical. I don't know that I'd say one is stronger. Let's take a look at APHQF. So this is an OTC. All right. So clearly Cronos and Canopy are stronger than Aphria. That being said, this doubled as well. It went from 7 to 14. It does have overhead resistance, and its consolidation range wasn't quite as orderly and did involve a substantial fake out before it broke out, right? So if someone had Aphria, they might have been sort of tricked into getting rid of their shares here, right? As it broke down. That was a pretty strong breakdown, big shakeout before it resumed its move up. Since then, incredibly strong and a big move up, right? As opposed to, you look at CGC, their shakeout was much tamer. Now, it still was the potential to scare somebody off, but this would have been open to interpretation where you might not want to, you might not want to abandon your holdings yet, right? And you look at Chronos, and this one didn't really scare people too much either, right? It did, depending on how you were drawing your trend lines, you might have been worried about it, but it never had that massive shakeout that APHQF or AFRIA had, right? So I would say of the three that you just pointed out, I think Chronos and Canopy are the more trustworthy as far as what I've seen from a technical perspective, with AFRIA being the one that is still very strong, but has shown signs of weakness that these two have not, right? One, it's still not at new highs, and two, it was weaker when these things pulled back, right? Are there any others that I'm watching? Personally, no. I want to say my brother has traded a few of these, right? And one of them is hemp. This one is not quite doing the same. You could tell, you can see it's a penny stock. And it's not quite doing the same as what Canopy and the others. No massive volume on this. I think weed was another one. Oh, that's Canopy. Never mind. But I personally don't have a good tell on this. If Frank was here, I think he'd probably name a few others. But there are no others that I'm watching. I'm not actively involved in these. I probably should be, but I find that my personal speculative interest has been more in cryptocurrencies than these weed stocks, for better or worse. And so I haven't spent a lot of time looking at these names and trying to figure out where they're going. Nothing against them. I think that they show explosive potential, and are very worthwhile potential speculative adds to traders that are looking for bigger growth, bigger sort of hits on their trades. I've had my interest in another place. So, Jax, you're saying GWPH is the big dog of the bunch, right? So, you can see sometimes what happens with the big dog is they don't fluctuate as wildly as some of the smaller names, right? Because they're not as impacted that strongly by news, especially for a company that maybe has other potential. These guys are pharmaceuticals. They may be involved in more than just weed, right? And if that's the case, then maybe their bottom line isn't quite as impacted by the news that something like Canopy or Chronos is. And so we look at these guys. I mean, overall, still very strong. They did have this pretty big drop earlier, but this is a pretty good looking chart, right? So you have this base, right? You had the breakout, you had the retest, and now you have what appears to be a move forward. So on the weekly, this is indicative of a chart that's ready to continue probing back to new highs. On the daily, same thing basically. You can see we broke out, we came back. We're still retesting that breakout, so still a lot of selling pressure coming in, but it's on the right side of this trend line and it's on the right side of this floor, and overall is indicative of a stock that wants to make its way back higher, not lower, despite the fact that it's sold in the last couple of days. General Cannabis is another one that Jax is looking at. Not quite as strong. Again, so it looks like Chronos and Canopy were really the two big strong names, right? Now these guys have had some volume come in. You can see there has been decent volume as it's sort of kicked up, but the overall trend is still not up. So they're still struggling. And let's see if we can add a little bit, some trend lines here, get a better picture of some key levels on this. This is not an easy chart to really gauge. I would say somewhere around here. So it's actually dealing with a pretty decent level here, right? So what I was looking at there, as you can see, on a few occasions now, it's tried to get above about 350, 360, and then it comes back. This time it broke below it. It came back, retested, broke below, came out, retested, broke below, came back. And this time, it still hasn't really broken back above 360. And you'll notice it's been a longer retest as well. So these guys are at a pretty critical area here. They're trying to break out again. And if they do, I'd like to see if they can actually reverse this trend of continuing to weekly bounce and then come back and retest. So it needs to actually retest and break out to the upside as opposed to what it's been doing recently. But again, the key here is with names like this, they all have potential, and so you want to make sure that you don't just throw all your money into one weed stock and say, well, this is the best one, because you never know. You never know what comes out of left field and decides it wants to be the strongest one. Just go back to the tech sector and say like MySpace versus Facebook, right? Even Yahoo versus Google. If you had decided erroneously that MySpace or Yahoo was better, you would have missed out. And again, they both still provided traders with decent profits, but you would have missed out on the stronger winner, the name that emerged as the strongest, right? So in a situation like this, I'm not saying go ahead and buy every single weed stock, but maybe buy two or three. Divide whatever you were going to put in one, divide it into two or three names, and that way you have more potential for the explosive winner. Now, granted, that also means you're probably going to hold a potential loser, but with the potential explosion in price that some of these can have, the winners should really dwarf the losers if this industry continues to grow and continues to become an even bigger part of legal, recreation across the country. Okay? All right, guys. That was a productive hour. I hope you guys enjoyed today's analysis. Those of you that are regulars, or those of you that are subscribers to our Patreon, and most of you guys are in here today, I put up a trade idea yesterday, and I put one up today. Keep an eye on those. And those of you that are not, feel free again. I highly recommend you check out our Patreon page. Subscription, the smallest subscription is $8 a month, right? That's like a McDonald's lunch one day. And you get at least 2, 3, 4 trade ideas a week, which is, I think, an insane bargain. So feel free to check that out. It's patreon.com/stockdarts, and I hope you enjoy what you see there. Other than that, have a good rest of the week, and we will see each other next Wednesday.